Welcome to The Explainer. Let's jump right in, because today we're unpacking an absolute behemoth of a mega project, the Kabalega Industrial Park. To put this into perspective, this project is designed to completely rewrite the rules of East African trade and manufacturing. So whether you're a large-scale investor hunting for a high-yield venture, an exporter, a logistics company, or a local business owner, this breakdown is absolutely for you. We're also going to dive into some very specific opportunities for development partners, and especially for farmers and agro-processors. We'll cover exactly what's being built right now, and more importantly, how you can position yourself to actually take advantage of it.
But hey, real quick, before we get into the weeds, I want to hear from you. We love taking complex source material and making it completely visual and easy to digest. So what massive government project or development initiative do you want us to break down next? Drop your ideas down in the comments. And of course, if you find this kind of structured breakdown helpful, make sure to hit that like button and subscribe so you never miss an explainer.
Okay, let's dive into this and look at our roadmap for today. 1. Welcome to Kabalega. 2. Core infrastructure. 3. Logistics and trade. 4. Agribusiness. 5. Actionable steps. And 6. Future outlook.
Section 1. Welcome to Kabalega Industrial Park. The government's vision here is, quite frankly, massive. We're talking about a master plan spanning 29.57 square kilometers. And this brilliantly illustrates just how huge that is, nearly 3,000 hectares. To put that in perspective, you're basically looking at the footprint of a small city. Acquired by the government of Uganda and officially handed over to the Uganda National Oil Company, or UNOC, back in 2018, you have to understand that this isn't just a simple factory zone. It's a highly integrated, multi-billion-dollar ecosystem that's zoned specifically for an international airport, an oil refinery, an export-free zone, and dedicated spaces for heavy petrochemical industries. And for the large-scale investors and development partners tuning in, here's the number that really turns heads. The park is projected to contribute roughly $4.9 billion annually to the national economy once it's fully up and running. That includes a projected $3.4 billion per year boost to the GDP, specifically from the integrated oil refinery producing domestic fuels. It is a colossal economic engine, and the whole point is to transition the nation from being heavily import-dependent right into a self-sufficient industrial powerhouse. Section 2. Core infrastructure and mega projects. So what's actually anchoring this entire ecosystem? Well, it revolves around a few heavy industry titans. First up, you've got the Uganda Oil Refinery, which is designed to process 60,000 barrels of oil every single day. And just recently, a massive $4 billion investment agreement was signed with UAE-based Alpha MBM International to develop this exact refinery. Right next to it sits the crude oil export hub, connecting straight into the broader pipeline network. But, to support titans like these, you absolutely need foundational utilities. That is exactly why the cabinet approved $120 million in funding from the Danish Export Credit Agency to build out the Phase 1 infrastructure. We're talking vital roads, water systems, power grids. This funding is a huge deal because it proves those foundational utilities are actually getting built, which significantly de-risks the project for any early investors. Now, looking objectively at the sources, it's absolutely crucial to weigh the projected impacts against the current realities on the ground. On one hand, the job creation potential here is totally transformative. UNOC is projecting between 32,000 and 35,000 direct and indirect jobs across refining, logistics, and support sectors, mostly favoring skilled engineering and operations labor. However, on the flip side, creating a footprint this massive has naturally faced some very real land acquisition hurdles. Since 2017, the displacement of over 7,000 residents has led to ongoing legal challenges specifically regarding compensation delays and valuations. And while the government notes that billions of shillings have already been dispersed and many people have been resettled in model villages, it's important to note that cases from displaced residents seeking compensation are still currently being heard in the High Court in Hoima.
Section 3. Logistics, trade, and warehousing.
Okay, so if you're an exporter, an importer, a trader, or you run a logistics and supply chain business, pay attention to this. Central to this entire plan is Uganda's second international airport, Kabalega International Airport, and it's being built right inside the park. As of November 2024, Phase 1 was already sitting at 96% complete. By August or September of 2025, this facility is scheduled for operational readiness and the official government handover. This rapid timeline is what paves the way for full industrial operations to kick off by 2026, meaning for logistics companies, the infrastructure you need to move heavy freight is quite literally just around the corner. Now, what's really interesting about this setup is how these specific facilities solve major regional supply chain bottlenecks. The airport features a 3,500-meter runway that is tailored specifically for wide-body cargo jets. That means heavy, specialized oil and gas equipment can fly directly to the site. No more complex overland detours. Plus, the master plan includes pre-built warehouses and offices that are ready for immediate occupancy. Traders and logistics operators are also going to find dedicated crude oil and refined product transmission hubs, right alongside massive storage tank integrations linked directly to the East African crude oil pipeline. It's essentially designed to be a highly centralized, globally connected logistical nerve center.
Section 4. Agribusiness and petrochemical opportunities. You might be wondering, what happens to all the byproducts from the refinery? Well, they're going to fuel a completely new downstream manufacturing sector. We're talking about taking raw materials straight from the refinery and turning them into everyday consumer, industrial, and agricultural products. The park is specifically zoned for secondary industries like polymers and plastics that utilize those chemical outputs. Crucially, it's going to house plants to produce ammonia-based fertilizers, with specific zones carved out just for agro-processing. And we're actually already seeing major corporate movement here. UNOC just signed an agreement with Vivo Energy to develop a massive liquefied petroleum gas, or LPG, storage and cylinder filling facility right inside the park, which is going to dramatically boost clean cooking fuel access across the entire region. And speaking directly to the farmers and agro-processors watching, the production of ammonia-based fertilizers using natural gas byproducts is a literal game changer. By manufacturing these fertilizers locally, the ultimate goal is to slash import costs, eliminate frustrating supply chain bottlenecks, and create direct linkages for local farmer groups to access these new agricultural inputs. It's really all about taking the energy sector and using it to directly turbocharge the country's agricultural output. Section 5. Actionable steps for investors.
So, the crucial point is, how do you actually get involved? If you want a piece of the pie, here are 3 concrete steps to navigate the entry process based on UNOC's framework. Step 1. Review UNOC's land allocation guidelines. These outline exactly how land within that massive 29 square kilometer park is leased out to investors. Step 2. Explore joint ventures. UNOC is actively hunting for strategic JV partners right now to help with facility management, marketing, and direct infrastructure investments. And step 3, integrate national content. Your proposals absolutely must include robust plans for employing and training local labor, utilizing local consultants, and sourcing locally. National content is not a suggestion here, folks. It is a strict requirement. For the capital investors crunching the numbers, let's look at the actual project viability data from UNOC's strategic plan. The financial models are projecting a 30-year life of the project, with a highly attractive rate of return sitting at 15.36%. Furthermore, the net present value, which, if you're unfamiliar, is basically the projected current worth of the project's total future earnings, is estimated at a staggering $1.75 billion. These are the exact hard metrics that are already pulling in international partners from Dubai all the way to Denmark.
Section 6. Future Outlook and Next Steps.
Let's move to the immediate horizon and see how this builds toward 2026, because there are some critical final milestones ahead. Right now, UNOC is in the middle of finalizing the evaluation of a strategic joint venture partner to actually manage direct investments and operations. At the same time, construction is actively moving forward on the official UNOC site office right in Kabale, establishing a real physical management presence. All of this is building toward one ultimate target, achieving first oil production and getting the core commercial operations of the park up and running by mid-2026.
Which leaves us with one final massive question. Will the Kabalega Industrial Park truly be the ultimate catalyst that transitions the country from an import-dependent nation into a regional industrial export powerhouse? The infrastructure is rising, those billion-dollar investments are locked in, but executing a master plan of this sheer scale is a colossal undertaking. So, what do you think? Drop your thoughts, your debates, and your questions right down in the comments section below. Thank you so much for joining me on this explainer. Don't forget to like, subscribe, and definitely share this with anyone looking to understand the future of business and trade in the region. I'll see you in the next explainer.